Hi guys, hello everybody. This is Dari here. Hope you're well. I am first of all excited to present today, and the reason being that we have reached 1000 subscribers on this channel. Hooray! Wow, it is only 1000, but you know what? I am most grateful for that, and as well, I appreciate and cherished every subscriber on this channel. Thank you so much. Thank you so much. Uh, I thought it would be good to actually introduce myself to you and show my face. On the screen, this is me here. My name is Dare Ijagbemi. Dare Ijagbemi. I am of African background. Today, however, we are going to talk about Bollinger Band. Okay, we will talk what is Bollinger Band, the purpose, the calculations, what is the squeeze of Bollinger Band, the breakouts, and finally, we will talk about 4 strategies to trade using Bollinger Band. At the end of this presentation today, you will be able to look at a chart and identify some key turning points and opportunity to trade using Bollinger Band. What is Bollinger Band? So here is the expert. His name is John Bollinger. He is the expert. He is the author. He designed, formulate, create this indicator. So whatever you want to know deep into this indicator, here is your man. He has a website where you can learn more. But today I will try to describe what it is and how to use it successfully. The indicator, as we said, is developed by John Bollinger. It is actually a volatility bands placed above and below a moving average. So the volatility is based on standard deviation, which changes as volatility increases or decreases. So this band automatically widen when volatility increases and narrow when volatility decreases. So this dynamic nature of Bollinger Band also means that they can be used on different instruments with the standard setting. So in summary, Bollinger Band is the plotting of 2 standard deviations away from a simple moving average. The middle is a simple moving average. The top band is a standard deviation above, and the lower band is standard deviation below. What actually is the purpose of having a Bollinger Band? The main purpose of Bollinger Band is to provide an proportionate definition of high and low. By definition, prices are high when they are at upper band, prices are low when they are at lower band, the average price is at the middle band. So we know when you are going to the shops, you want to find your item at the place you can get it the best lowest price for the same item. So the function of Bollinger Band is to help you identify when prices are low and when prices are high. So how do you calculate Bollinger Band? So we start from the middle. The middle is the 20-day moving average, simple moving average, basically 20 SMA. And the top is just that same 20 moving average. You add 2 standard deviation of that moving average to it. And same thing with the lower band, is the same 20-day moving average, but you subtract from it 2 standard deviation of that moving average. You subtract from the 20-day moving average. So that is the standard settings, default settings of Bollinger Bands. Do not worry about how to calculate it, because most of the trading platform has already done that for you. MT4, TradeStation, and many more. They've already done all the calculations. Bollinger Band squeeze. So what exactly is the Bollinger Band squeeze? It is the central concept of Bollinger Band. When the band come close together, compressing the moving average, it is called a squeeze. So a squeeze signals a period of low volatility and is considered by traders to be a potential sign of future increase in volatility and possible trading opportunity. So conversely, the wider apart, when these things are so wide apart, the more likely the chance of a decrease in volatility and the greater possibility of exiting any trade that you are in. These bands actually give no indication when the change may take place or which direction. So the band tells you something will happen because it's closing together, it's squeezing together, but they will not tell you what direction it will go, down or up. The breakout. Approximately 90% of price actions occur between the upper and the lower Bollinger Bands. The upper and the lower Bollinger Bands. Any breakout like this one above or below the band is a major event. The breakout is not a trading signal, so the mistake most people make is believing that the price hitting or exceeding one of the bands is a signal to buy or to sell. Breakout provide no clue as to the direction and extent of future price movement. So you see prices break out over there. You don't actually know yet how long the breakout will last. Okay, now we come to the meaty part of our discussion today, the strategies. So as I said earlier, we have 4 strategies for you today. I have 4 strategies for you today. Number 1 strategies is inside band trading. Firstly, to use this strategy, you need to find a forex pair that is in trading range. Trading range, it has to be in a range. You can use any time frame. The greater the range, the better. In this example, this pair is actually in a range. As you can see from this point, as soon as the price go out of the band, they simply come back. When they go out of the band, they simply come back. When they go out of the band, so the price are confined within the band. That's what is called the range. So if you find such a pair, then these are the opportunities for you. So you just buy when price test the low end of the range and the low at the lower band. Conversely, you sell when prices test the high of the range and the upper band. So here prices are testing the upper band, prices are testing the lower band. So when they test the lower band, you will buy. When they test the upper band, you will sell. So because they are in a range, you can do the two directions together, buy and selling, once it reaches the range. So for a conservative person, if you buy at this lower band here, you exit in the middle. However, for an aggressive trader, they will exit at the upper band. So opportunity again to buy and to exit here or exit there, depending on your trading pattern. Here is opportunity to short the market, exit here, short here, exit here, buy the market, exit here, buy the market, exit here, and sell the market, exit there. So just on this screen, you have 7 trading opportunity which are all successful. Okay, so the key to it is you must find a pair that is in a range. You cannot use this strategy during breakout. Second strategy, the pullback to the middle. Pull back to the middle. The key to this particular strategy is that you have to wait on a test of the middle line. Test of the middle line before entering the position after a strong up move or down move. So when there's a strong up move and there's a pullback to test the middle line, that's a signal to go long. So there's an up move and there's a pullback, buy. Up move, pullback, buy. Up move, pullback, buy. Up move, pullback, buy. So these are, so there are 3 buying opportunity here, 1, 2, 3, and you can exit them at the end, at the opposite end of the channel, the upper band. So as I said, the key is to wait to test the middle band, so you can increase your likelihood of placing a winning trade if you go in the direction of the primary trend. Please go in the direction of the primary trend. You can see primary trend is up, so you have to go in direction of that primary trend, which is buy, buy, buy. I know there are opportunities to sell here and sell there. However, this is selling is not in the direction of the main trend, so avoid going against the main trend. Remember, the trend is what is your friend. Third strategy, surfing with the band. Surfing with the band. So breaking the band occur during times of extreme volatility and is the strongest signal issued by Bollinger Bands that a trend reversal is imminent. As we mentioned earlier, prices are within this band about 90% of the time. Therefore, prices should only break above here only about 10% of the time when you were using the two standard deviations. In our example, we noticed the tightening of the Bollinger Bands right before the breakout. There's a big tightening here before the breakout. So the middle line, which is the middle Bollinger Band, can actually represent a support on a pullback when the pair is riding or surfing the band. So when there's a pullback to this middle line, it's an opportunity for you to add to your position. In a very strong trend, it will not even reach this middle band. It will just hug this upper band, or if it's a downtrend, it will just follow and ride on the lower band. Okay. Last but not the least of our strategies today is the Bollinger Band reversal. The Bollinger Band reversal. So what is the Bollinger Band reversal? So you can take a short position when you see a fake breakout leading to reversal. So that's a fake breakout, it leads to a reversal. You can short here. Similarly here, there's a fake breakout and the reversal, you can short. Fake breakout, reversal, you can short and exit your position at the lower band. If you are aggressive, exit your position at middle band. If you are conservative. So guys, this is 4 strong strategies that is being tested and is being used in various markets, in forex, in stocks, in futures market, and many more. Guys, usually people will still have 1 or 2 more indicators in order to confirm some of these signals. So if you have another indicators that can help to confirm when there's a signal, that will be helpful. So Bollinger Band himself has written 22 rules. So it's a rule that he has compiled. So I will briefly show you the rules. So he has compiled these rules, Bollinger Band rules. So they are 22 in numbers. 1, 2, and so on and so forth. There are 22 in numbers. They are very useful rules compiled by the author himself. So this is the work of the author. It's not my work, it's the work of the author. So if you need this rule, if you need to go through this rule, you have 2 options. You can go straight to his website and read it over there, but I've put it in a PDF for you. If you are interested, I can email to you just as usual. Comment and add your email address in the comment section and ask for the ebook, that is the 22 rules of Bollinger Band trading, Bollinger Band trading rules, and I will email it to you for free. So once again guys, thank you for your support. I am really looking forward to the next video. So guys, I'm signing off again. Here is Dare.